The price of oil surging today after the energy minister from Qatar told the Financial Times that production of oil and gas in Gulf states could stop within days because of the U.S. and Israeli war on Iran. Of course, bombs are flying. Take a look at West Texas Intermediate. It's up over $90. Can't remember the last time we saw it at that point. So again, if that happens, there could be an incredible fallout as a ripple effect takes or settles in. Let's go to Brian Kessens on the senior portfolio manager with Tortoise Capital. Brian, are there concerns about sustained pressure on oil and gas where you are?
Yeah, I definitely think that is the case. I think everyone is watching the production of oil, natural gas, the form of LNG, and then even natural gas liquids, the production there in the Middle East. And maybe not, obviously, the production can still happen, but how are you actually going to transport those volumes, those molecules out when you've historically gone through the Strait of Hormuz? And that is more or less closed at this point, or at least no one is willing to take the risk to make that transit.
Not only that, but I guess supplies are already backed up in the Strait of Hormuz with everything that has happened this week. So it's going to be a lag on that as well. And we know after what happened with the pandemic, once the supply chain gets a kink in it, it can take a while for that to work out.
Yeah, for sure. I mean, in the Middle East in particular, we have a lot of nations, a lot of companies already starting to shut in production. Fortunately, they're able to do so in a very methodical manner so that when they do bring the facilities back online, they can take a more measured approach in doing so. But nonetheless, it does take weeks. In a lot of cases, to bring an LNG plant, Qatar has said it will take weeks to bring their plant back up online. So, yeah, it doesn't just happen overnight where you just flick a switch.
It's only been 1 week, not even actually. At what point do you start worrying about the effect on inflation with the price at the pump spiking for North Americans?
Yeah, I think we're already seeing that at the pump. You know, the gas stations are not not in the mood to wait before they actually increase prices. And I think we're already starting to see some inflationary pressures, not only in the U.S., where, frankly, given our position relative to the rest of the world, because we are the largest producer of energy, our prices certainly for crude are higher, gasoline are higher, but our prices for natural gas actually are relatively flat on a week-over-week basis. So we're fortunate there. But I think as you look internationally, that pressure on inflation is going to be even more so.
Okay, so let's talk about ways investors can benefit from this. Those who have been holding on to oil stocks are pretty happy because the price of crude has been depressed for a while. They didn't see really any growth last year. So how would you play this right now? Would you put new money into oil, or which way would you go?
Yeah, I think energy presents a great opportunity right now, and we think even for the remainder of this decade as well. Right now, our sense is the market that is the most interesting is the LNG market, where Qatar in particular, they supply about 20% of the world's natural gas in the form of LNG, and they've essentially shut their facility. So the LNG market, we've seen LNG prices spike pretty materially. Is really looking to the U.S. to try to add any more LNG supplies to the market. The largest U.S. pure play LNG exporter is Cheniere Energy. We think Cheniere Energy is really interesting at this point because of that. But then some of the larger integrated companies also have a fairly material LNG business, notably Exxon and Chevron.
Okay, so do they have both the capacity and ability? Do they have reserves that they can put out? Do they have a way to get them out to the places that they need to? Can they essentially pump that up?
Yeah, we think that they can do a little bit. Historically, LNG facilities have been able to operate, at least for a period of time, above nameplate capacity. So we think that there is some capacity for them to put some more LNG on the water and into the market. I would say, though, to your point, it is limited in the U.S. in that, for the most part, all the U.S. LNG exporters were operating, for the most part, already at full capacity. But we do think that they'll find some ways to get more molecules on the water.
Would you do that now, meaning put more or new money into natural gas, or would you kind of wait from that signal from the Gulf that they have to shut down?
Yeah, we would go ahead and put the money to work. We think that this is an opportunity, but we think that opportunity is not only because of what's happened more recently, but even over the longer term, as it relates to natural gas in particular, electricity demand, not only in the U.S., but globally, continues to grow. We think that electricity demand, by and large, is going to be met with more natural gas-fired power generation, which is going to increase LNG demand for the next 5 years. Cheniere, in particular, has talked about having $30 per share in cash flow by 2030, which we just think is a really attractive proposition.
Got it. Brian Kessens, going to leave it there, sir. Have a good weekend. Thanks for your time.
Thank you. My pleasure.